Good day, guys. I hope you are doing great. This is going to be a lesson on open, high, low, and close, and open, low, high, and close. What this means, pretty much, we're going to be studying how wicks are built from the open to the close, and the wicks that put between these levels. Okay, so we are going to study how we can buy, for example, the wicks of a candle and sell the other side of the wick, and we're going to start here on this concept, and we're going to move into the second part of this video into how we can apply this directly on daily candles and weekly candles to do what? To buy the wicks of every single day. I mean, of course, we're going to be pairing this stuff with all the previous lessons, so please, if you haven't watched them, I recommend you guys to start on the external range security to internal, and watch the next lesson, which is, if I remember correctly, is changing the state of delivery and market structure shift as entry model inside your external to internal range security. So let's continue. Let's start with candle formations. Okay, it's important to understand that every single candle have four steps, pretty much. First one is the open. The second one is the lows. For example, for a bullish candle, we have open, we have low, and then we have the expansion, we put the wick, and we have the close. Okay, actually close is here, sorry. So same for bearish candles. We have an open, then we have a high, we put the wick of the bearish candle, and then we have a low, and then we have the close. Okay, what we want to be doing is buying into these wicks and selling into all this expansion. For example, if we are anticipating a bearish candle, we want to buy the wick, we want to wait for the open, then buy the wick, and eventually sell into all this expansion. And if we are, for example, buying a bullish, we want to buy the wick and sell all the expansion. So we have the open, we have the low, which is the wick of the candle, and we want to sell on all this expansion. And these are just examples. Okay, how does this look, for example, on a chart? Okay, this is a daily candle, and this is an H1 chart. So here you see we have the open of the day, we put in the wick, we shift the structure here, and we expand and eventually close higher. And for a bearish candle, it's pretty much the same. We have the open, we have the manipulation, or we have the wick, which is the hike of all this future bearish candle, and we want to be selling in all this expansion. Okay, I mean, we want to sell here and buy here because that's pretty much like the mechanic of selling. And yeah, this is pretty much what open, high, low, and close, and open, low, high, and close mean. So let's move on to how we can apply this stuff. If you haven't understood fully at this point, don't worry. We're going to continue studying this in a moment. So let's continue with weekly profiling. Okay, the profile that I'm going to teach you guys is the weekly one. Okay, this can easily be applied to the daily chart. So please, if you see me talking about the weekly, I mean, this is fractal, so you can use it on the daily too. And I'm going to show you examples using the daily. Okay, so first of all, this is the index that we're going to be following for this video. Okay, it's important that you already have an understanding of internal range security to external and external to internal transitions, and also that you know how to use the economic calendar, which actually is really easy to use. And let's continue and start with the index. So introduction. Okay, weekly profile is the anticipation that we form during the week based on the price action during the first few days and based on news on the calendar. Okay, pretty much we can define weekly profiling as the study of how the weekly wick is being built, how the weekly bar is being built during the first days of the week. So there are, I believe, three types of profiles. I'm going to show you guys the classic buy profile. We have a void profile, we have a consolidation profiles, but 9 out of 10 days, at least for indices, you are going to be using these ones, classic buy, and of course the opposite, classic sells, which is the same, just the opposite. So let's continue. So imagine that this is a weekly bar, okay? So we have inside all this bar, we have Monday, Tuesday, Wednesday, Thursday, and Friday, okay? So what are the conditions to have a classic by week? Also, what is a classic by week? A classic by week is when we have an open, a small week on the low, and we have a massive expansion during the week. For example, let's go to the charts. For example, here you see we have 1, 2, 3, 4, 5, 6 classic by weeks. Then we have 1, 2, 3 sell weeks. 1, 2, 3, 4, 5 classic by weeks. Actually, this is more like a consolidation profile. But you see, this is not the. We don't have this type of candles. This would be also like some type of consolidation profile. But most of the time, 9 out of 10, you're going to have classic buys and classic sells. So this is the first profile you want to learn. For example, here, this was pretty much like a pin bar on the weekly, in the monthly, which reflects on, remember, this is fractal. Weekly, monthly is all the same. And this reflects as a consolidation profile also. Like we don't have like a clear direction, price just chopping during all the week or all the month. So yeah, use here it's exactly the same. Classic by weeks, consolidation, classic back weeks, consolidation, classic sell, classic buy. 9 out of 10 you're going to have that expansion to the upside or to the downside. So let's continue. So yeah, the weekly profile seeks to frame price sensitivities between internal range liquidity and external, okay? I would recommend you guys again to go and check out the video, and you should already understand how this stuff works. So I'm not going to explain this here. So yeah, the economic calendar, okay, let's start here. Okay, this one plays a key role in this process, okay? High impact news often are the ones that put volatility into the market. These are catalysts for the markets to manipulate towards one side of the array. So for example, let's say we have high impact news, we have red folders. On Tuesday, we can expect Tuesday to have a lot of volatility, and if we engage a high time frame level, this can be a good swing point to look for a reversal on the opposite side of the range. I'm going to show you guys, of course, how this looks, and show you the rules step by steps of how we can use these ones. You see, high impact news on Monday and Tuesday, this is based on actual data of 20 years of the Nasdaq data. Monday and Tuesday are often the days that have the highest probability to put in a bottom or a low for the rest of the week. If we are going to have a classic buy or classic sell, the low of the day is going to be putting on either Monday or Tuesday. And we want to have high impact news on Monday or Tuesday. So for example, here, the red ones, the red folders, we have on Tuesday. So this could possibly be a classic buy week. Of course, it depends on the narrative and the price action. And we're going to explore this in a moment. So, weekly profile checklist, okay? We're going to do this step by step on a real chart, and I'm going to show you real examples, so don't worry. Okay, is price inside or approaching to a high time frame level on the weekly, monthly, daily, or H4 array? What this means is we want to be using H4 arrays, daily, monthly, and weekly arrays, okay? Ideally, weekly, monthly, and daily. We can use also this one to frame trades, but of course these ones are going to be stronger. And if we have all these 3 or 4 in sync, that's a really nice point of interest to look for longs. So first of all, you want to check out the economic calendar. Okay, let's say we have news on Tuesday. Okay, it may be a possible classic buy week. The economic calendar, you have it since the weekend. Way before the weekend, actually, you have pretty much all the information about the economic calendar weeks ahead, so you're always going to know what's going to happen next week, right? For this, you can look on Forex Factory. So you want to ask yourself, do you think that price is going to print bullish or bearish on the week based on economic calendar and based on where is price right now? Is price approaching to a weekly level, monthly level, daily level? And did we engage a high time frame period array on Monday or Tuesday? For example, you see here, it's Monday, Tuesday. Are we touching a higher, okay, let's say this is the open, okay, this is Sunday open. We have Monday chop. Monday often creates like this range for the week. And Monday high, Monday low. Okay. Tuesday, we have high impact news, we have red folder, okay? We engage a high time frame array and we take Monday low. We shift the structure, okay? At this point on the change in the state of delivery or shift in structure, this is a valid classic buy week for me or a classic sell week. It's really simple, okay? Once you have the weekly, monthly, or daily array or H4 array, you want to be waiting for the change in the state of delivery and for price to continue expanding all the next days. All the next days are going to be expansion. Okay, this is pretty much like just a fractal of MMXM patterns, but pretty much you can see it from a simplistic perspective of just we took one of the weekly arrays on Monday or Tuesday, we have volatility on these 2 days, and price shifted here structure, and eventually we have the expansion during all the week, and we want to be framing, for example, here on this specific example, on these H4 gaps, you see? Here on these H4 gaps. So this is the open, this is the low being put in exactly on the weekly array, or let's say on a Tuesday, and all the next week is going to be expansion, okay? So let's now go to a chart and let's see how this stuff looks, and let's do some active learning. So I'm going to be asking you guys some questions, and I want you guys to be answer the questions with me, even before I ask them, please. So let's start, okay? So the profile, okay, how do we define weekly profiling? Weekly profiling is the study of what? I want you guys to tell me. If you can, please take a notebook and grab a pencil and try to take notes, okay? How do we define weekly profiling, okay? Weekly profiling. Remember, this is a fractal concept that also works with daily candles and monthly. But right now we are studying the weekly profile, okay? We define weekly profiling as the study of how weekly candles are built from the open to the close, okay? Really simple, right? Try to answer all these questions without me. And I mean, try to practice. So, okay. What are the conditions to have like a weekly profiles? What are the conditions? I'm going to ask you, okay, what are the conditions to have a classic weekly profile? Buy or sell. I mean, a classic buy or sell week. A week where we are going to be expanding, okay? That's what means a classic buy or classic sell. What are the conditions? I mean, let's see if you can remember one. Something related to news, okay? Economic calendar, high impact news on Monday, or what is the other day, if you guys can tell me, okay? Monday or Tuesday, okay? The first 2 days of the week. Perfect. This is pretty much like the conditions for a classic buy week. What is the second condition? The most important one. Price want to be engaging what? I mean, what type of levels price want to be engaging, touching on Monday or Tuesday with the volatility? Price needs a high time frame level. So this can be a weekly level, a daily level, actually monthly level, weekly level, or H4. These are your higher time frames levels, right? Price need to engage a higher time frame, either monthly, weekly, daily, or H4 level, right? So at this point, it should be really simple, guys. Okay, really simple. And I want you guys to ask you, where is price likely to form the low? The week, for example, if it's a classic buy, the week. This would even be, I'd say, before this one. Where price is likely to form the week? Price is likely to form a week on higher time frames, monthly, weekly, and daily levels, okay? And then what is the next step? Okay, the next step, okay, let's say price already, let's go. Okay, I already have the open. Okay, we have hiking venues on Monday. We create some liquidity here on Monday. We have hiking venues on Tuesday. We engage a higher time frame array. And what's these two components? After engaging a higher time frame array or confirmation for a possible classic buy, week, or sell is, I want you guys to tell me. I mean, you should already know. Structural confirmations. Okay, so for this we use time frame alignment, and I want you guys to tell me. I mean, you should also already know if you watched the previous video and take notes. Let's say if we are engaging a weekly level, for example, let's say we are on a weekly fair value gap, where in what time frames do we want to frame or change in the state of delivery? On the H4, we want to see price creating an H4, a change in the state of delivery or market structure shift with SMT and displacement. With SMT and displacement. Displacement always in the form of a fair value gap. So this is pretty much all you need. I mean, I try to put this as simplistic as possible for you guys. And yeah, I would say you don't really need any other stuff for this. And we're going to see now in a moment how this looks exactly. Okay, so let's create this fractal now together. Okay, so it can be even better for you understanding this. And if you want, you can of course take a picture of this and save it. So let's say this is our weekly candle. Okay, let's say this is a candle that we are expecting to be bullish. Okay, let's put this a bit bigger, and let's put the wick for my candle. Okay, this is going to be my wick high and wick low. Okay, actually often classic buy wicks or classic sell are going to have really small wicks, and I mean, you see for example something like this. This is pretty much like a pin bar, but majority of them are going to have really small wicks. So this is our candle. I mean, I want you guys to be following this with me. What are the parts of every candle? Okay, we have open. Okay, what else do we have? I want you guys to be active, saying it on loud. Open. We have open. Okay, let's mark out our opening candle. You see, I mean, I don't want to go back to the open or high close, but I want you guys to tell me. I mean, what is the open of a bullish candle? Okay, we have the open of the candle, which is this one. We have the open of the candle here. Sorry, we have open. We have low of the candle, and then we have high and close. High is in the form of expansion. Expansion. Okay, so we have open. Open. Okay, let me mark out this to right. We have low, a second step. Okay, low. Let's even put out numbers to these ones. Right. We have open. We have low. Okay, perfect. We have all the expansion here, all this expansion, which is pretty much the high. Let's put this as 3 expansion. Actually, we can mark out here the high, which is expansion actually, and the close for this close. So we have open, low, high, and close. Okay, and this is how a classic buy week is going to be looking like. Perfect. So now let's put out the days of the week. Let's mark out here. Let's split this in days. Okay, I believe it should be easier for you to follow. Okay, this is Monday. This is Tuesday. What do you think is going to happen on these days? I mean, what And I want you guys to tell me, what do you want to see on your weekend? If when you check your economic calendar. I mean, what type of news do you want to see, guys? I want you guys to tell me what type of news we want to have. We want to have high impact news. On which days? I want you guys to tell me. Monday and Tuesday, to qualify as a classic by week, right? I mean, we are building this part by part, and we are checking the theory, and at the end we're going to check this with real examples. Okay, so let's continue. Let's mark out these ones in another color. Why? Because these ones are more important days. Okay, because we are likely to, I mean, just based on 20 years of that data, and I'm going to send you guys some websites where you can check this out to confirm it. I implore you to don't believe me, and always look for this information. Try to back test it. You don't have to believe my word. You don't have to believe anybody's word. I mean, the best way you can actually learn if something works is look for the data. If you can, of course, like get data for some type of stuff, and collect the data yourself. How do you collect the data? Using journals. I mean, you have to journal. It's important to have always a journal. So this is going to be Monday. Okay, perfect. This is Monday. Okay, let's mark out with only one letter, so it's not like too much information. Then the second day of the week, and each with this one. Sorry, which one is? I want you guys to tell me. Tuesday. And these are the most important days of the week to qualify as a high probability bottom or long for the rest of all the week, Monday and Tuesday. Okay, then we have next days. Okay, let me just put these ones faster. Okay, Friday. Okay, let me move this one fast so we can finish this video quicker. So yeah, we have Monday, Tuesday, Wednesday, Thursday, and Friday. Perfect. And we have Monday and Tuesday as the highest probability days for price to create what? To create a bottom. So we have, let's say we have this open on Sunday. Okay, nice. It's Monday. We are chopping all Monday. And let's say this is Monday. This should be Tuesday, Wednesday, Thursday, Friday. Yeah. This is Tuesday. And we want to see price engaging a higher time frame array. I'm going to put this in a moment, and just continue expanding all the week to eventually put the week on Friday likely, and just close, of course. So let's make this here so it's not annoying. And what do you want to have? For example, we have the open. What do you want to have below your open? I want you to tell me. What do you want to see below the opening? Price taking a higher time frame array, right? We want to see price tapping a higher time frame array. It's important that you understand that price is always necessarily be moving from high time frame array to high time frame array, just like I explained on the first lesson. Price is always be moving from higher time frames array to higher time frames array. This is one of the missing pieces that majority of the people have, because they don't want to be looking at higher time frames. But this is pretty much where I would say 50% of the edge that we can have is. So yeah. Okay, we also want to have ideally an SMT on these lows, right? This is part of our classic entry model that we saw on the change in the state of delivery or market structure shift video. You know how you can enter to this one and what qualify as a high probability here. So yeah, this is pretty much how the week is going to look. And what is this? What is this spot? This is a high time frame key level. It can be a weekly, daily, or H4, right? Or monthly, of course. Let's put it just like monthly, weekly, or H4. High time frame. Okay. And what is this one? Another higher time frame level. I mean, you're always going to be moving from higher time frame levels to higher time frame level. from here to here. Of course, when price is opening, you want to consider all the previous narrative that we have. Is price approaching to a higher time frame level? Yes, price, let's say, is about to hit the weekly, let's say a weekly fair value gap. Okay, let's say price is about to hit a weekly fair value gap. Okay, so we tap it on the H4, we shift the structure on Tuesday with what? With the high impact news, because high impact news are going to come with a lot of volatility. And these are going to be catalysts for you, for price to move way higher and have like enough fuel to expand, right? These are days where majority of the people get liquidated, sadly. So yeah, I want you guys to take a photo of this. Actually, I'm going to take a photo. And sorry, okay, I need to take this photo. And yeah, I want you guys to study this stuff. So now let's see how this looks in real charts. Okay, let's see how this looks in real charts. So let's take any random. I mean, this can be applied to any single week. We can take this one. Okay, this one is October 32. Sorry, 23. Okay, let's start here, because here we can see really clearly that we have all the classic weeks. So let's see how they look. But we can take any of the weeks actually. We can take any of the weeks. I'm just picking this one because I mean it seemed like more simple to show you the example. But this I'm not like picking this one especially because this is like the only week that it happened. You can do this with every single week. I mean, I just grabbed one level randomly. So what do we have here? Okay, we have a monthly fair value gap. Perfect, really simple. So price is bouncing. I mean, we already know from the price is going to bounce here because we have the monthly fair value gap. So now let's move to weekly time frames and let's see what's happening. Okay, price is going to move from this monthly to this monthly internal to this monthly external. Let's see how the weeks develop here. Okay, perfect. Okay, actually let's move to the H4. So you can see actually how the week is being formed here. So, okay, let's see. And let's see. Okay, this is Monday, Tuesday. Okay, nice. This is really great. So we tap here a higher time frame level. When we tap this level on Friday of the last week, perfect. We are coming. I mean, remember, context matters. We are coming from a higher time frame level, which is monthly fair value gap, internal liquidity, and let's see how this develop. I don't know if we had like high impact news here, because of course I can check like this stuff. This is like long ago, and let's see price open. Okay, we create this gap. I don't know if we create here an SMT. I would have to check like with yes, but let's just use this as example. Okay, we have a fair value gap. We are coming from a higher time frame level. We are creating this change in the state of delivery. Price open and create this small wick on. Yeah, actually, I'm pretty sure we have high impact news today because you see all this week. This is a manipulation week. This is a really nasty week, and ideally, of course, you want to see price engaging, let's say, for example, this H4 array, coming from this monthly and creating another, of course, change in the state of delivery to be framing longs where in all the gaps. You want to be framing longs in all your gaps. For this, you're going to be using low time frames and true models. But yeah, price move from a higher time frame level to another higher time frame level. So let's hear, sorry guys. Oh my god. So let's hear. Here we're still in the context of this monthly fair value gap, internal range liquidity to external. I mean, we want to see price hitting all this part. I mean, just based on one higher time frame level. I mean, it's really simple because monthly also have the manipulation. We have the open. Actually, it's here. Yeah, exactly. Here we have the open. We put in a week and we expand to monthly external. Let's see how this develop. Okay, again, this is Monday. Okay, Monday and Tuesday. Here are the 2 days. Price. Okay, nice. Price engage H4 fair value gap on the narrative that we are expanding from the monthly. So we want to be framing longs where on our fair value gap. So price is expanding on the monthly. We are looking for longs because of the overall narrative on the weekly and the monthly. Because if monthly is bullish, weekly is likely going to be bullish too. And we create the wick on the first 2 days of the week, Monday and Tuesday. Okay, we put in the weekly wick, and price does what? Directly expand from here. Of course, we want to be looking for trades here, this gap or this gap. This gap. For this, we use lower time frame incentive model. So now let's continue. Let's see how this week develop. Okay, sorry. So yeah, we're seeing the context that we are expanding. I mean, let's see even on the daily. I mean, maybe on the daily we have also, okay, nice. What do you see here? We had also this daily gap, and we had here another daily gap formed after close, and price actually bounced from this H4. I mean, you always want to be aware of what is doing the H4, the daily. And yeah, so we open, we put in the wick inside this H4 array on a bullish narrative from internal of the range fair value gap on the monthly to external external swing on the monthly, and price put in the low, engage an H4 array, nice. We put in the wick here, you see, open, low, reclaim with structural confirmations here. Exactly, we have the change in the state of the delivery. And we tap this level and eventually move higher. Of course, we want to have some type of SMT here, and ideally a displacement to do what? To continue just framing longs here on the next days. So here, for example, we tap this and pretty much do another expansion this on lower time frame. For example, you enter on the M15 to this type of trades. So the entry, for example, for this trade based on all the stuff that we've seen would have been this one. And what is this one? This is pretty much what people call a unicorn. We have a price taking liquidity on the H4 reaccumulation. Okay, let me put this with a line. And sorry, let me put this on. Okay, sorry, I was using So we have H4 reaccumulation on a narrative that is bullish, on our higher time frame that is bullish, and we displace above, we inverse one gap. Okay, this qualifies as a very high probability change in the state of delivery. We inverse one gap and we create another. Right, nice. This is really, really great. This is pretty much textbook based on what I showed you guys on the last video. And once price, okay, let me put this one. This one is nice. Okay. H4 FIBE, H4 fair value gap. We displace, and our entry would have been where? Here. With the target where I often put my stop loss on the rejection blocks. And yeah, I mean, the target would have been any higher time frame level or just 2 fixar. I mean, it depends on the model you're using, how you want to approach to these trades. And when the H4 fails, you want to be framing on the daily. But your narrative is going to be built on the weekly level, right? So let's see here. Yeah, I mean, here we actually, I'm not really sure because I don't want to go and check out the pair right now because it's going to be messy. I'm really sure it's going to be messy, actually. But let's do it just for okay, let's see. Okay, this is the hike. No, actually, I mean, but it's pretty much like the hike of here. And yeah, actually here, let me see here. I mean, we did create like an SMT on the close. SMTs are created after a close. Yeah, it's pretty much this. Yeah, this qualifies as an SMT at least just to take profits on the close, and take profit for me at least would have been this swing as pretty much obvious liquidity, right? This would have been your take profit likely, or just hold trade if it's closing above. Yeah, I mean, this pretty much would have been the trade. But yeah, you always want to have some type of SMTs lower too. Let me check if I can look for. It's just that I don't know why when I open like my chart like this, these ones get like too messy. Okay, anyway, let's just continue, guys. Oh my god, sorry. Okay. So yeah. Okay, let me see. Oh, now this totally returned to my. Sorry, guys. Yeah, it always happen. I don't know why. When I'm trying to use like this tool on the two pairs, that it gets a bit messy. But anyway, so let's see now the next weeks how the next week develop. I mean, open, low, high, and close. It's going to be always open, low, high, and close. So we have. Okay, this is not a classic expansion. This is more like a consolidation week. And here, let's see. Okay, price open. I don't know if here we take a higher time frame level. I want to see here if we already took any significant higher time frame level. Okay, nice. We took these hikes, and actually we created SMT. If you want to check out with Nasdaq, sorry, with ES, we created this SMT. We had a close here. Price was pretty much like closing below this on the H4. Really great. And okay, yeah, this was actually after. Sorry. And ideally, okay, we have this change in the state of delivery, and my entry would have been on this fair value gap. I would have preferred to see a price going to this level and creating the open here, the wick here, and the close lower. I don't know if price, for example, on ES created a gap. Let's see if I can check out without price just totally messing. Yeah, here, which is the gap. Okay, nice, perfect. And what do we have here? SMT created exactly on our higher time frame array on a bearish narrative at this point, because we already took the external and we're going to be seeking for some type of internal on the daily or the monthly. Yeah, actually, we have, for example, all this fair value gap. Remember, I don't know if price is going to bounce from here or not, but we took the external range, so I want to be framing to internal right now. To know if price is going to hold this, we use, of course, all the concepts that I just talked before on the previous video. But all these are possible gaps where we can frame trades. And the first one, of course, is the major one. Let's see what price does. Okay, nice. We bounced exactly from the 0.5 of the gap, and we continue expanding the next weeks. So yeah, I mean, this is pretty much what weekly profiling is. This is pretty much how you want to be trading open, low, high, close, and open, high, low, and close. And I would recommend you guys to take photos of all the concept that we study. Remember, the keys to understand this is internal to external, external to internal, economic calendar. We want to have high impact news on Monday or Tuesday. We want to engage a high time frame array on the weekly, monthly, daily, or H4. We want to consider where are we coming from. Ask yourself where price is likely to put in the week. If I could tell you guys to summarize all this in one sentence of what the weekly profiling is where price is likely to put the week for the week. So yeah, that's pretty much all for this video. I hope you guys enjoyed, and see you later for the next lesson.